Aloha! Hey, it's Julie Zemelis for 365 Hawaii and our Moving to Hawaii group. And we are coming to you live. A few of you might see this on YouTube. And if you want to be part of you get to answer your questions live experience, join the 365 Ohana, and I'll put a link below so you can learn how to do that. But I want to welcome all of our wonderful realtors that are from around the island to help us today understand what's happening with the market around the island. And also we're going to talk today about strategy, getting your offers in on a tough market. So I'm going to kind of go around the old, circle here. We have Lance Owens with Louisville Real Estate, Delania Branham with eXp Realty, Jana Mahoney with Windermere, Amber Haley with Hawaii Life. And then we've got the Win team, Marla and Scott, who are going to talk about mortgages, and Eric Zemelis at your top right there, Mr. 365 himself. So so let's get to it. So let's start talking about what's going on with the Big Island housing market. So we'll start with Delania. Do you want to talk a little bit about the condo market to start with?
Big change from last month. There's no inventory. There are actually, Lance, if you add the two preview, there's 20 current condos available in Kona proper. I would say about 10 of those have been on the market for over a week, which means there's probably something wrong with them, or they're a little less desirable. So that means, how many hundreds of people are going after 10 condos. So that's pretty not good odds.
Right. Yeah. And so do you see what the what's going on with the pricing? So
it's going up.
Yeah.
Keeps moving up. Everyone's waiting, to see if it's going to drop off, but demand is just killing us. And so, prices are coming out that I'm sure everyone else is like, I can't believe they're asking that much for that property, and it goes under contract and they get their price, they get over their price. So, we're kind of all along for the ride.
Yeah. When Lance and I first started talking about the condo market a couple of years ago, when it was starting to creep up, I think Lance, you were talking about was going up $10,000 a month. Is it like going up like $10,000 a week now or something? I mean, is it that bad?
I mean, yeah, I don't know the metrics on it, but it's kind of shocking. And I think it's the craziest market at least in 12 years I've seen. I think probably most of us feel the same way that, these prices for these properties, you can think back a few years ago and go, wow, that house was $200,000 less. And that condo was $100,000 less, but so yeah.
There we go. That's what we're dealing with.
Quick question, Delaney. Is that one still? I was getting a couple of calls on that condo that only had 7 years left on the leasehold. Have you been getting calls on that?
Kona Kai or the Ali'i Villas?
Ali'i Villas.
Yeah, see that those are on the list of like undesirable. The numbers don't work out for that, even if you pay cash. They tend to sit for a little while, but they're on there. There's a few of those.
Delaney, can you explain just a quick little bit about the leasehold, the last part of the leasehold, and how that works when we get towards the end?
Well, most of the time leasehold condos aren't as big of an issue because the landowners renew the leases. It's in their beneficial interest to just keep renewing. If there's a negotiation period. But there are two that I'm aware of. There's one tower of the Ali'i Villas condominium complex, and then there's another complex called Kona Kai that are both leasehold, that they are on their tail end of the lease and they're expiring and there's no plan to renew the lease. So at that point, they take the property back. So if you own in there, you only own until the end of that leasehold period, unless something changes in the next few years.
So you lose your investment.
Well, yeah, it depends on how you look at it. If you've gotten your money out of it, if you've gotten your time out of it, then,
you got your time out of it.
Yeah. Okay. Yeah. It's like turning back a leased car. Here's the end date. You turn it in, turn over the property. It is what it is.
Yeah. So, because we have two of the people who've joined us today, Patrick and Seth. They're both, looking for condos. And I mean, I know that, a single family home would be great, but at least understanding why you might see these condos for like, everything else is 500 and you see
110,000.
110,000. And that's probably what's going on.
For 7 years. Yeah.
So
it's probably something that Marla and Scott can talk about.
Yeah.
But they typically, you can't get a loan on those either.
Usually it's a cash
Yeah.
deal.
So the
Right.
requirement is, if you want to know, is that conventional financing requires there's 5 years after the expiration, or sorry, 5 years after the loan matures left on the lease. So if it's a 30-year mortgage, it needs to be a 35+ year lease left in that term. FHA requires 10 years. So the shortest lease we can do is a 15-year lease, and that's a 10-year amortized loan with a 5-year on the back of the maturation of that loan. But that's a very high payment for just a 10-year repayment plan.
Okay. Good to know. Okay. Leonce, are you in the position to talk about single family homes?
Sure. Can you hear me?
Yeah.
Sorry, guys. So again, very similar thing. I think there's at this very moment, there was 48 homes available on the market in all of Kona. Normal productivity at this time, normally we'd have, 150, 160 homes available. So we're looking at that, and I looked at, there's only 5 under 800,000. And actually with our median price at $1,070,000 on homes, I didn't count how many was under that, but I know most of us consider affordable homes under 800. So
Under 6.
Yeah, under 600. So if I jump over to under 600, I've got one. So one, it's 7 days on the market. I'm sorry, it's priced at $599, 3-bedroom, 1 bath, and it is 880 square feet.
Oh, wow. Okay. Yeah. So the median price is still $1,040,000.
When 1,070,000 was what it ended up at last month, so 20,000 over Honolulu median price. And then when I looked at it earlier yesterday, this month we were on tracking $1,090,000 for the median price.
Wow. Wow.
So things can change. We're only halfway through the month, so
Great. They're gonna get better.
could go down. One good thing is, I like to go more by the seat of my pants when I'm looking at things and talking to clients. And we had 6 homes on Caravan today. So I think last month we talked about we'd had a few on Caravan. And for people that don't know what that means, Caravan is realtors hold open house so that all the other realtors can come in and see it. And for many times we used to have to hold 3 different caravans for different areas of the island. And now we combined everything into one. So what used to be spread out to 60 different homes over 3 months on a typical caravan is 6 in for, that's it. That's everything available that they could show us today. So that is a good sign, because it was 1 or 2 or none. Most of the past year, it's only been the last probably month or 2 that we've had them on there long enough that they're not sold before we can make it to the next week to put it on the caravan.
Wow. Okay. So that's heartening news. So okay. So okay, that's it for the single family home market for Kona. It's tight. Okay. So Jana, you're going to cover Waikaloa Village, Waikaloa, and Waimea.
Yes, and I've got a couple more areas that I pulled out today. So in Waikaloa Village, when I ran this morning, there were 7 condos for sale. And now there are 6, because one of them went contingent in the intervening 2 hours. So that's how quick that market is. 3 out of those 6, or 3 out of those 7 accepted pets. So that's another thing to think about. Not all of the condos accept pets. So if you have a client that's looking for a condo with pets, that can be pretty tricky. In Monalani right now, there are 3. $1,850,000 to $2,450,000. That's the condos in Monalani. In Waikaloa Village for residences, there are 4, and one of them just came on the market yesterday. Looks pretty interesting for $850,000. And there's 1 residence at Monalani for $6,995,000. In Waikaloa Resort, there are actually 4 condos for sale, and 2 of them came on today. So one's in Colony Villas. Well, and the other one's Puako, and that's not a condo. Sorry, I ran those together because there were just 4 altogether, but it's a residence. So not a lot in Waikaloa Resort. You've got 875 Colony Villas, and then you've got 2 Koleas, and they're like 1.8 million and 2.3. Then the next one to the north is Hapuna. I broke them out separately because they're so different from the other properties. And you basically have 8 condos and 1 residence, and you run from like 9 to, oh no, sorry, that's a lot. 2.5 to 4.7. So those are a lot pricier, but they're really nice up in Hapuna. So I broke them out because if you don't break them out, it throws off the averages for everything else, right?
Right.
And then I went ahead and ran a Waimea list. They've got 3 condos now that are like 179 to 399. The 179 is a studio. 19 residences right now in the Waimea area from 705 to 8 million. And in North Kohala, so that would include like Kohala Estates, Kohala Ranch. You have 16 properties. So I kind of split it out a lot more this time, just to kind of show exactly where. So in Lance's map that's behind him, you can see like the blue section for South Kohala, and the right next to that, the one I just said in North Kohala was the one where Kohala Ranch is. And you've got 5 in Kohala Ranch, 5 residences, 1,895,000 to 4,008,000, and 13 lots. So what's happening as the inventory shrinks, a lot of people are buying lots now.
To build.
Right.
Yeah. Okay. And I'm sure that that I don't know if we should have a construction person in here. Like what's happening? I mean, maybe someone wants to throw in here. Like I think lumber prices have come down. I don't know if construction is moving ahead any faster. Permitting, I don't think has gotten any moving faster in the county. So
I think that, so I've sold a couple lots recently, and the thing that's taken a long time right now, it seems like, is the permitting. So you have to get a permit first from the HOA. And then after you get that, you can move to the county. The HOA is typically, from what I understand, a little more difficult to get than once the HOA has approved it, it seems like the county is not as difficult, but I don't know if that's always the case or if it's just that way at Kohala Ranch because they're pretty much sticklers. But it is taking a long time to get a permit right now. And a lot of the builders are booked out for a long time too. So it's not a very quick thing to build a house here.
Yeah.
I just add something to that, Jana. I know I sold a client a lot out there that's building, and it took a couple of months, I think 3 months, to get back just his landscaping review on that. So the HOA is very slower than the county, I think.
Yeah. And again, for some people who might not understand what they're talking about, is the homeowners association gets a chance to do a design review on what you're planning on doing with your house, right? So I don't know, do they actually ask for the architectural design of the entire experience before they'll let you even, okay. So
Kohala Ranch and Ali'i, Kona, what is it?
Kohala by the sea, Kohala waterfront, all of them are the same.
yeah,
Kona
there's one here off
Vistas
of
was one I was
Lico,
thinking.
off of Laco does that to you
Yeah.
too. In
Kona Vistas, yeah.
But
So-
I did see, if sometimes you see a listing and it's kind of interesting because somebody will buy a lot and then maybe they're a builder. And so they get the permit and they go through all that work to get that done. And then they can sell the lot with nothing on it, still the same lot, but it has a permit.
Mm.
And people will pay more for the lot because they don't have to go through that permit process. I've seen that happen several times up here too.
That's an investment opportunity.
Right.
And a cesspool operation as well. So,
Right.
okay, so Amber Haley, Hawaii Life, she's taking the east side. That's Hilo all the way down to Hoa. However, that whole section of that part of the island works. She's the woman. So Amber, go for it.
Aloha, everybody. Amber Haley here from Hawaii Life. So we are seeing a lot of the same over on the east side of the island. Inventory is still really low. So there are a lot of buyers competing for the same houses. Median sales price for a single family home in the South Hilo district last month was $550,000, which is up significantly from where it was a year ago, 2 years ago. Like we've been talking about in these Zooms, prices keep going up. In Puna, the median sales price last month was about 347,000, which is also significantly higher than what we saw a year ago, 2 years ago, and so on. So it is still a really competitive market over here. In Hilo right now, there are only in South Hilo district, there are only about 39 active single family homes listed, which is really low. And the prices range everywhere from 155,000 for I like to call them skull and crossbones property, where you can't enter the property. It's got a lot of issues, permitting issues, safety issues, all the way up to $23 million. But like I said, the median sales price last month was about 550,000 for South Hilo. And Puna district is the district where we have all sorts of different lava zones, which really affect prices depending on where in Puna you're looking. But prices continue to creep up, and we're the same thing as I said at this meeting last month. I'm continuing feeling shocked at some of the prices I see when they do go under contract, just like I think Delaney was talking about. See a price that shocks us, and somebody's still buying that property. So yep, competition definitely, and hopefully we can all give you some tips on how to make your offer stand out in a market like this, because yeah, it's still definitely a seller's market with low inventory in East Hawaii.
There you go. Okay, and then, okay, and before we step into mortgage, Lance, you have something to say?
I just wanted to say real quick, because I know somebody was looking for homes under 500, and that's why I changed my background screen real quick, and you can see the different areas that we work in. But when you see an address and it says 71, 72, 73, this is what it's pretty nice, because you know exactly where it falls at on the island. If you see an address that says 21, you know it's over here, things like that. But there is a couple of places down in South Kona that are just outside of North Kona. So if you see an address that says 81, 82, 83, 84, things like that, you can kind of you'll see, obviously if you get all the way down to 89, you're almost to Ka'u or Ocean View. But it is a good map. I know we've shared it on the 365 page before, and we can share it again.
There you go. Oh, and then also before we go to mortgage, Eric, did you want to kind of just talk a little bit about what you're personally dealing with, what's happening out there, and your thoughts? Oh, I can hear you outside, but I can't hear you here.
All right, there we go. Seth and I have been working together and trying to find one of our 20 condos that's out there that fits the bill for them. And it is a difficult time, and there sure seems like there's a lot of, there's still a pretty good pent up demand of people wanting to multiple offers on every property. So it's one of those. I agree. It seems like maybe there, with the more, as Lance was saying earlier, that there's more properties coming on that, and I'm also thinking maybe we'll get through some of, some of these buyers that have been here a while might actually get a property and sort of move on. So it might open up things a little bit, not make it quite so crazy. But it's an interesting time to be in here.
Yeah, it's frustrating for buyers right now too. So yeah. So Marla and Scott, we're going to talk about the strategies of home buying and what's the best way to get into getting the your offer accepted, and obviously getting your mortgage in place is number one. But is there any updates or information that you want to share at this point with what's happening out there that you might be seeing?
I think maybe we could just touch on rates real quick, just to let everybody know what that's looking like. Interest rates have continued to increase, unfortunately. So right now, the most recent survey for nationwide averages in terms of interest rates, we're sitting at 3.92%. So we're getting pretty darn close to that 4% range. And of course, these are nationwide averages. They account for 20% down payment. Owner-occupied property, I think a 720 or higher credit score. So of course, all those things can impact interest rates as well. If it's a condo versus a single family home, or if it's a second home or an investment property versus a primary residence, lower credit scores, lower down payments can all increase those rates even further. So unfortunately, we're starting to see those higher interest rates. But I will point out that when we look at housing affordability, again, this is from a nationwide perspective, we're still in a pretty affordable housing compared to where we are on average over time. And so I think that sometimes we get caught up in housing prices are going up so rapidly and interest rates are going up so rapidly, and it might feel like we're getting to a point where it's not affordable. But if we look nationwide, I think the typical affordability is that 28% of your income is going towards a principal interest payment on your mortgage. And right now, even with these higher prices and higher interest rates, we're still sitting at just 25.8%. And if we compare that to right before the housing bubble of 2007, 2008, we were sitting at 34% of people's incomes were going towards principal and interest payments on their mortgage. So for what it's worth, maybe it's still decently affordable, even though we are seeing those higher interest rates and higher prices.
Good perspective, good perspective. Because when it gets to the point where it's over 30%, that's when unsustainability hits. And that's when there usually has that possibility for bad things to happen. So we're at 25%.
We're nationwide 25.8% currently.
That's a good number.
So yeah, now there's a lot of other factors that played into the bubble in 2008, more than just the affordability aspect, but definitely that was a part of it.
Free money, free money.
Yeah.
And Marla, do you have anything to add to that?
One thing that Lance mentioned was that the median home price right now is like $1,070,000. And conforming loan limits did increase this year. So the conforming loan limit now is $970,800. So what that means is that you can get better rates and terms on a mortgage up to that loan amount without having to go into a jumbo loan. So what that equates to, like a 10% down, you can still buy a property at $1,078,667 with 10% down and get a conforming loan. You can go all the way up to 1.213 million if you're putting 20% down. So that's good because conforming loan rates are actually lower than jumbo rates too. So
yeah, right. Okay, with that, we have 3 people on the call right now. Do you guys have questions for our panel of amazing advisors about real estate or mortgage?
Julie, this is Patrick. You know, our situation is starting to look, probably have to look at condos, 2-bedroom, 2-bath condos. And if we're going to do a cash offer, which it seems like we kind of need to do, that, we're probably limited to about 500,000. So that's kind of one thing, is just how realistic is that, even that we could find something for that.
Delania and Lance, is there $500,000 condos, 2-bedroom, 2-baths out in the Kona area?
Trying to pull up right now. I think Ali Lani's been coming up there. I mean, their prices are going up, but their 3 bedrooms are going for around 5. So you could probably get in there for under 2. I would say that you're going to probably find 2 or 3 complexes maybe that you can get into if you need like a true 2-bedroom, 2-bath. Sometimes there's one that are kind of like, quote, 2 bedrooms. There's a couple, Keaho Palena and Keaho Akahi, that have sort of a flex space. Those usually come in a little bit less, but yeah, at that price point, you're looking at maybe 3 or 4 complexes that are going to be in your price range. And then you have to think about the fact that bonus, you have cash, but if it's priced at 500, what's it going to go for? What's your offer going to need to be? How much higher you're going to have to go over that 5 to win it,
And that was kind of my next thought. So if we get 500,000 cash and end up having to get them for 600,000, do people consider offers that aren't cash now? I mean, are they even looking at that, or you have to have cash?
No, I mean, I think Lance pulled comps recently, and wasn't it like 40% of the recent sales were
out of 30 homes, 17 were cash, so 13 were financed. So
the bonus is I kind of look at it in tiers. So like cash is top tier, second tier if you're financed but you have a majority down or at least half down. Third tier is that 20% down, 5% down. You're praying that you get accepted because there's 2 other groups of buyers above you. So even if you came in with 500 down and got a small mortgage for the balance to get into a property that you wanted to get into, it might take offering 2 or 3 or 4 times, but you have a shot.
Patrick, have you thought about doing just that, like getting approved for a small mortgage to accompany your cash, so that then you can use some of your cash to leverage your offer to do an appraisal gap and an escalation clause?
Well, we're kind of at the beginning of pulling this money together right now. So like right this minute, we're talking to a couple lenders to get to refinance our current house, which we will keep and pull money out and, probably end up in the $450,000 or $500,000 cash. That's where that cash is coming from our current house. And that's why I'm interested in like what the possibilities are. I don't want to do that if it's like impossible. If I've never, if it's not going to work, I don't want to pay the fees and our interest rate's going to go up on our house and all that kind of stuff. But that's where I could get money. That's, if we're going to get money for it, that's where it's got to come from.
I should have a kid to sell.
Have you considered doing a HELOC on your property instead of a full cash out refinance?
So we did look at that a little bit, and it seemed like the interest rates were quite a bit higher, or maybe the fact that they're adjustable and could go higher.
I would say there are other things you can do to make your offer even more attractive. Like don't ask for inspections, don't ask for the seller to pay for the survey. Condo, that's not applicable. I mean, you still need to do an inspection for sure. But, if you make it as clean as possible, if you put an appraisal gap in there, if you, talk to the listing agent and say, when do they want to close, and make sure that your timing matches up with the seller's timing. Just make it, just say, what can I do to make this a great offer for your sellers? Or have your real estate agent do that.
Yeah, because oh, go ahead. Well, I was gonna say, with all these people, when they talk about their experiences, what's happened in the last year, sometimes it's not always about price. It's about what you're able to say. Good.
Yeah, and when you create that appraisal gap, what you want to make sure that you do with your realtors is on your proof of funds, have all that ready. And when you write that appraisal gap, show that you have that extra 100,000 or 50,000 in an account on top of your 20% down or 30% down, whatever you're doing. So that'll stand out in the offer. If you actually take the time to put that in the offer and write it out in spelling, here's my proof of funds and here's my proof of appraisal gap on top of that.
And I'm not familiar with that term, appraisal gap. That's
it. You're basically saying if it appraises for 500 and I'm buying it for 550, I will make up the 50 without even asking a question. I'm not going to ask you to split it with me. I'm going to just, you put a number on it. You don't want to blindly do it, but you want to just say that like, hey, you got it listed for 500. I'm going to pay you 550. I'm willing to go over, and I'm willing to, I understand. And that's the biggest thing, is that the other person understands that you understand. Because I've had realtors tell me, well, just counter back that. I'm like, you haven't even explained it to your client. So I'm not going to teach your client how to buy a place. If your realtor doesn't come in with that explanation to the listing agent and the proof of it up front, that makes it a very strong offer. So.
No question for you. With the appraisal gap, does that still apply if you're paying cash for a property? It doesn't, right? It's only because a lender needs to see the appraisal so they'll get the loan, right? So right. Patrick, if you were rocking it with cash, at least, it wouldn't matter, but the price is the price and you pay it. So.
Okay. And the loan, if we have to do a loan for something, buying 600,000, it's $100,000 loan, and they're not going to have a problem with that.
Right, Marla?
Yeah, I mean, the property still has to appraise for the purchase price. You'd get a bigger loan in that case, use more of your cash and finance a larger percentage of it if you only had so much cash and the appraised value came in a little lower. But one thing I want to mention about that appraisal gap, and Lance, I think this is how you write yours up, is that it has to at least appraise for the list price. And then if it at least appraises for the list price, then you'll pay over to X price, right? Like if they listed at 500,
we don't actually do that. We just do it off of the, we'll go over the comps with the buyer to make sure that they're comfortable and show them the comps and probably a guesstimate of where it would appraise at. But I don't, because it's such a competitive market, I don't even do something like that. I just make sure everybody's educated going in of what it could be and what today's numbers show. So that's all we do. Yeah. Sorry.
Yeah. So So-
Let me just add maybe a little bit to those creative financing ideas that Patrick, you were talking about in terms of either financing the purchase out of a refinance on your current home versus financing the purchase versus like a home equity line. Depending upon the occupancy of the house that you're financing, you're going to get better terms on the property that's your primary residence. So is your primary residence going to be here in Hawaii?
No, it'll be California.
Okay. And then do you currently have a mortgage on your home in California?
Yeah,
Okay.
a little
So
bit.
if you have an existing mortgage on your home in California and you want to finance that property in order to help get the cash necessary to buy a home here in Hawaii, you're going to have to do a cash out refinance.
Yep.
Cash out refinance carries a higher risk and therefore a higher interest rate than what a primary purchase, like a purchase transaction would be versus a cash out refinance. So the reason Marla had suggested maybe looking at a home equity line is because of the fact that when you do a cash out refinance on your existing mortgage, most likely you're going to be going up in interest rate. If you, I don't know if you know what your interest rate is, but if it's in below 4, then you're probably better off staying put with your existing mortgage and instead getting a home equity line for just a small portion rather than financing your entire existing balance and all the cash out that you need at the higher interest rate. And yes, the amount that you would get cash out in terms of the home equity line might carry a higher interest rate or carry an adjustable rate on that, but you're not having to carry a higher interest rate on the entire balance. Does that make sense?
I kind of follow what you're saying, and I think so. We've got about 185 left on this house, and talking about pulling probably not quite 500,000. We can't quite get that much, but probably 460 or something like that out. And they're talking about rates of under 4%, slightly under 4%. For that, up from what our current rate is, like 2.5 or 2.6 or something that we currently have. So
I would suggest looking at what a home equity line might look like. I mean, it sounds like you're planning to pull cash out in order to do the purchase here entirely, that you don't have the cash position without doing the pulling equity from your current home.
Right.
Okay.
Right.
Well, I would just maybe compare the two because a home equity line is generally going to carry far less in closing costs. You're probably going to pay $5,000-$6,000 in closing costs on a cash out refinance versus a home equity line that generally is going to be under $1,000. And you're increasing from that 2.875% rate all the way up to approximately 4%. That's a big increase on your interest rate on the existing balance. Whereas if you just needed that 400, yes, you're going to get a higher interest rate on the home equity line, but you have less closing costs. Generally, it's interest only, so you can help pay that back faster. There might be some introductory rates. So just a suggestion, not saying that that's exactly the right path to take, but it's just, I think, worth looking into.
Yeah.
He's a smart guy. You should listen to that guy.
Sometimes even though it's an adjustable rate, the adjustment might be lower than the new fixed rate you would get on your current place doing a cash out to. So if it only adjusts every 5 or 7 years, then it's not going to adjust for a while. And most people don't stay in their mortgages for 30 years. So if you're refinancing everything for 30 years, the likelihood of you staying in that mortgage for that entire 30 years is pretty slim.
There could be caps also on each adjustment period. So again, something worth looking into.
Good info.
I want to throw in one last twist on that, because if you, at that last part that you do borrow for the condo, make sure, if you do end up, like we talked about earlier, getting a $600,000 condo and you pull, maybe you only pull 200 or 300 out on the equity and then pull 300 out over here. It's critically important to have a local lender for your purchase here because of all the nuances with all the condos on the Leaky Drive. So on that second part of the loan, I think Scott and Marla made some great suggestions there. Maybe just get the home equity line, keep your low interest rate, only pull out a few hundred, and then get the second loan. That's, your finances better than any of us, but that's a good point. But just make sure that you're using a local lender for the.
Yeah.
I'll add one more thing real quick, which is instead of the home equity line, if you don't like the idea of an adjustable rate on a home equity line, which is generally a 1-month adjustable, meaning going to change every single month based on the prime rate. The Fed has already told us they're increasing the prime rate 3 times this year. So most likely, no matter what rate you get, you're going to have a higher interest rate by the end of the year on a home equity line in most situations, unless you can get an introductory rate. But if you're purchasing here, you're probably almost better off financing the purchase here rather than doing a home equity line on your current home or a cash out refinance on your current home, so you can maintain that low interest rate on your current home and get a better rate than you would compared to a HELOC or a cash out refinance, because you're purchasing maybe a second home here, which carries very similar rates to a primary residence.
Okay, so that was maybe going to be my next question there is, so if I tried to finance in Hawaii, second home in Hawaii, finance all of it or most of it or whatever, what kind of interest rate am I looking at for something like that?
Lots of different considerations to be
Yeah.
had there, and we can talk offline more about what that might look like based on your unique qualifications, down payment, all that sort of stuff. So I can't really answer that very easily.
I guess I'm scared that it's going to be a lot more than, you know, my current 2.5 or the proposed 4 of the cash out scenario.
What I will say is that purchase transactions generally carry a better interest rate than refinances, definitely carry better interest rate than cash out refinances, but a second home generally has a slightly higher interest rate than a primary residence. So between all
Yeah.
those things, my guess is it's all going to offset and be very close to what the terms would be on a cash out refinance on your primary residence versus a second home purchase here.
Huh, okay,
Break out the spreadsheet.
There you go.
interesting.
You know, it's another thing too, that for everyone who's watching this, since I've gotten a chance to get to know Scott and Marla, and they've got another person in their team too, there's so many different ways that you can look at financing. There's just knowing somebody who knows all these different avenues. You think, oh, I'm just gonna do it this way, and they can show you 4 different ways, and their 4th way might actually save you a boatload of cash. So it's always good to talk to people and really dig in on getting that information. Janet, did you have something to say? Okay, I thought you were doing your little hand thing. I noticed that Jim has stepped in. I know you're a little late, Jim, and you can always go back and watch the replay on YouTube. But Seth, I know that you're here. Did you have a question as well? No. Okay, so.
No question. Thanks.
Okay, so and it's funny, you kind of just organically helped this. One of the things we wanted to do with this Zoom call was to make sure that you guys got some good strategies for dealing with this market. And with a lot of the questions that were answered from what, you know, Patrick just said, it's pretty good. But I know that Amber had a couple that she wanted to share. And I just, again, if you guys could just kind of go around and just hit your favorite things to help people dig in deeper to get into that house. That would be fantastic to send that information to a bunch of people who might be looking for that. So Amber, you want to start with that real quick?
Yeah, I'll start with a few quick tips. The number one probably in this market right now is pay cash if you can. If you're not an all cash buyer, pay as much cash as you can, and that will help your offer stand out from other offers, especially ones that are financing a lot of the purchase. Again, if you're not an all cash buyer, if you can have, you know, a big earnest money deposit, that really shows the seller that you are very serious. Also find out what's important to the seller. So some things that may be important to the seller might not be super obvious to you. They might be on a timeline where they want to close as quickly as possible, and they might be on a timeline where they don't want to close super fast, or they might want to try and, you know, stay in the house a little bit past closing or something like that. You know, they might have certain things really important to them that you wouldn't guess. So make sure that you have a real estate agent, like all of these agents on this Zoom right here, that will talk to the seller's agent and find out what's important to the seller. So you can kind of write your offer to that. Offer to pay for more things, maybe some things that the seller typically would pay for, maybe offer to pay for it or waive certain things as well. So those are a few like quick, easy ways that your offer can kind of stand out from potentially other offers.
Good job. Thanks, Amber. Janet, you want to throw in there? You gave a couple to begin with, but
Sorry, I agree completely with Amber. To talk to the listing agent and get some idea of what's going to make it easier for the seller, and that communication is important. I've even seen transactions recently where maybe the seller was building something somewhere else and they wanted to sale lease back. And so if you have some flexibility as far as that goes, like, okay, we'll let them lease, we'll buy it, we'll own it, we'll become the landlords until their house is built. And so that's kind of an option that I've seen come up more and more these days, because people then can cash out and use their cash on their construction, right? but again, just ask what it is that the seller wants and waive inspections, waive surveys, waive, let me rephrase that. Waive paying for them. You still need to have an inspection. You still need to do an inspection, but you don't ask, like say the seller to pay for a termite inspection. You still go get one, but instead of the typical way where the seller pays for it, you pay for it yourself. You can do the same thing with a survey, or you can do, what is the timing that they want? How fast do they want to move out? Slowly or quickly, and just tailor it to the seller. And so it requires a lot of individual, I guess, research with the listing agent.
Mhm. That's when you hire a realtor that's not afraid to pick up the phone. Eric has one, yeah?
Yeah, what I was thinking is flexibility. There's a lot of different properties that, as Delania might say, might fall into the slightly obscure and slightly not perfect category, but might fit your needs and might be able to get away from it. And so it's, can you adapt with what you're looking for and, see what you can fit to what's out there? Because if we don't have much out there, you got to say, well, could that work for me? And, is that 2-bedroom really a 2-bedroom, or it's been blocked off, or, the square footage is the same, it's different, or just different ways of doing it.
There you go. Okay. Lance, what's your 2 cents on this?
I agree with pretty much everything everybody else has said too. My biggest thing I think is an easy exit for the seller. What's it going to take? We did one, you can leave your toothbrush in the bathroom. Just go ahead and pack up and go. They left dishes, forks, spoons, foods in the cabinet, everything. We called up the food basket and donated the food to the food basket. But I mean, literally, they left everything, and they were going back to Japan, and we have a lot of that here, in Hawaii. So easy exits number one, and next, along Jana's line. My only thing with my waiving the. I do like Jana does, where you pay for everything. That's a good thing. I think an explanation of the as is addendum is important too. As is means you're not going to ask for the screens to be repaired, the GFCI plugs that weren't code when the house was built in the kitchen. You'll take care of that. You're not worried about that. The straps that aren't on the water heater, don't worry. When I move in, I'll buy that. But what that as is does is, if there's something horrible wrong with the roof or the foundation when you do your inspection, you basically can just say, look, my as is not what I thought it was going to be. This was hidden. You didn't disclose it. I couldn't see it. Nobody knew, but I want out. Or now I want a $20,000 credit for a new roof. And it gives you something to stand on, even though it was as is.
That's good. That's good. Delania, cookies, food, firstborn.
Firstborn. Thank you, Ryan. Yeah, I was going to say, Lance, I'm a big fan of the as is, and I've actually gotten repairs done on as is contracts, because at that point, a lot of times when you're in and they don't want to bail, they're like, well, these things came up. It'd be great if you give us a credit for it. So sometimes you can still negotiate around that. But yeah, those are helpful. Weaving, final cleaning, just like everyone said, any little thing you can do to make it easier on the seller, to make it more desirable, and just anything to make your offer stand out, which is challenging these days. But yeah, you just have to really just go through it with a fine-tuned comb and just say, okay, what can I do to this offer to give me an edge, and then cross your fingers.
Yeah, right. And then let's talk about making sure that you're ready with your financing. Scott, Marla.
So I'll add in a couple of things that I think we do that can help stand apart. I mean, that seems to be the general gist here, is you got to stand out from the other buyers. And if you have to finance property, the best thing you can do is to make sure that the agent representing the seller and the seller understand how well qualified you are as a borrower. And so one of the things we do is we don't just provide a generic pre-approval letter that says you're pre-approved up to a particular amount. We explain to the lengths at which we've gone to issue a pre-approval. There's many different definitions of a pre-approval. You can get a pre-approval from Rocket Mortgage online in 15 minutes or less, but it's not really a pre-approval. It's a pre-qualification based on some general assumptions that were made based on some very limited information they have. So when we issue our pre-approvals, we explain that we followed a 62-point checklist. We've got a completed application, credit check, automated underwriting. We verified income, we verified assets. We have paycheck stubs, bank statements, tax returns, W-2s, all the required documentation to issue that pre-approval. And then we go one step further and we provide 2 additional pages of documents talking about why we are different than most lenders based on the level of communication that we provide. Because that's another big complaint that real estate agents have about lenders, is that when things are going along the transaction, they don't know what the status of the mortgage is. And so we provide timely updates along the way. And so we explain that on the letter. And we also show them the track record we have. The other thing that I think a lender can do is they can reach out to the agent representing the seller and introduce themselves and have a verbal conversation surrounding everything that's on that letter. Again, it goes back to standing out from everybody. And if 3, 4, 5 people with financing are submitting an offer and only one lender calls that agent's going to feel a whole lot more comfortable about that offer than the others where they have maybe a simple pre-approval letter. So those are some of the suggestions I have from the financing side.
Good job. Good job. Okay, so that's pretty good. I mean, that's all great information. I mean, the guys that are on this call right now are getting, like, you know, you can go to a conference and pay thousands of dollars for this kind of information. Awesome. But is there other information that any of you need who are actually on the call right now? No. Okay. Okay. Because we are at almost 50 minutes. So I want to make sure that we keep this tight. So if no further questions, I want to say thank you to our group of realtors and mortgage professionals. Are awesome. We call them the 365 Hawaii real estate team because they're all amazing and they work under us. And both Eric and I have our real estate licenses, and but we'd like to also refer out as you need, and neighborhood experts and everything else. So that's what we do. If you want to find out more, go to 360. Go to our website, move to Hawaii 365.com, and you can also reach out. We'll leave phone numbers too, and I can put you together with any of these wonderful human beings. So with that, we will say aloha and we'll see you next month.
Aloha.
Thank you.
Aloha. Thanks.
Thank you.
Aloha, everybody.